Great, welcome. Happy Monday morning, guys. It is Monday, September 21st. Welcome back to a pre-market overview for today and hopefully get us set up for the rest of the week. So what we're going to do is we're going to go through our newsletter. We send out the newsletter every day, Monday to Friday. In that newsletter, we go through a lot of information. And so we do the pre-market overview for 15, 20 minutes to just expand on those concepts a little bit, explain how we got to these conclusions and how we use the technology involved as well. So just a quick reminder for those that might, reminder for those that have been here before, new information for those that are new. My name is Becky. My email address is there, becky@tradewithufos.com. Also support@tradewithufos.com. Those guys are a team normally quicker at responding, so you can email those guys as well, support@tradewithufos.com. Now, a reminder for those that are coming from within the Tradewith channel, if you're already part of the fund, today is Monday. So your first session today is futures at 9 a.m. and then you have an option session at 1 p.m. Eastern. Again, a reminder that Tuesdays and Thursdays are stocks and investing and sharpening sessions over the weekend, which will involve psychology as well as reinforcement of the concept and ideas. In terms of upcoming classes, the next one we have is the futures class, September 26th. That's starting next Saturday. Then we have stocks, psychology, backtesting, and trading plans. Oh, I think that should be run the other way. Trading plans and backtesting. So if you have any questions on that, you can let us know. I want to show you a video in a second about how you can go about learning more about these things and registering for them if you want to. Let's firstly put the disclaimer on the screen. I won't read it to you. It'll take me a while. So you guys can obviously pause the video if you'd like or mute me if you'd like to read it. Or you can go to the website, which is www.youcantrade.com and get additional disclosure information on there. It is important, obviously, that you read it, not just for legal reasons, but it is sort of, good advice in general that, of course, there is a risk involved when you trade. You need to be comfortable with that before you trade. And ultimately, it is your decision about the trades that you place, how much you risk on them, how many trades you place at once, and all of those kind of things. Again, come back and read it and or go to the website to learn more about all of those kind of things. Okay. So this is a little video that we're just going to play you now, which will show you how you can learn about more of these things. So if you go to youcantrade.com/channel/Tradewith, you can start a free trial or you can schedule a call if you have questions about something, if you want to talk through some ideas with somebody. There are courses that we do as well, the courses that I just told you. So if you click on Browse Courses, you'll be able to see them. We have futures, stocks, psychology, backtesting, and building a trade plan. If you click on any one of them to learn more, then you will see that you can schedule a call here as well. If you want to learn more about it, you can learn more about what we do on that class. When you're scheduling a call, you're just going to put in your name, email address, and the date and time that you would like to book a call. You can also type your questions as well if you want us to be a bit more prepared for the call so that we can have answers ready for you when we call you. You don't have to. If you'd just like to chat with us, that's fine, and talk through various things. Click request and you will have a pop-up to say that it's done. You will then check your email for a special meeting link. Okay, so just a reminder as well that we have an app on the App Store. It's not on anything Android or anything at the moment. I'm just on the App Store for now. So for those that have Apple products that would like to follow us mobilely, you can do that. Go to the App Store and search for You Can Trade. Okay, so that's everything in terms of this stuff, all the prep. So let's crack on and look at the newsletter. So the newsletter is on the right-hand side. This is what we send out every single day. We go through 4 of the major markets in the world. We look at the S&P, so top 500 US stocks. We look at oil and gold, both major commodities, and the euro, which is, of course, a major currency. So lots of volume moves through these markets. Lots and lots of orders move through it. So even if you don't trade these markets directly, I'm sure what you trade will be at least impacted by or correlated to the markets that we cover. You'll also notice that we go through a daily chart, a daily time frame for each of the markets. Now, of course, different things happen on different time frames. So if you trade much smaller time frames or much larger time frames, different things may be happening. But for us, we're showing a daily chart just because it's probably the most commonly used chart out there that most people are using in some form of analysis. So hopefully it fits in with something you're doing as well. So for each of the markets, we want to look at a variety of things. We're going to use technology to help us do it. The first thing we want to look at is climate. Climate tells us basically what trend is the market in, what direction is the market going in, but more importantly, what are the probabilities associated with that. So we use our Auto Climate app to help us figure this out. It's a technology that's analyzing market data for us and will come back to tell us what the trend is and what the probabilities are. It will show us that in one of three things. So on the bottom here, we'll see this section here. This is our Auto Climate app. It will show us one of three colored dots. So it could show us a thick blue dot. That would tell us that we have an upwards trend, upwards climate, upwards market environment, more importantly, probabilities to the upside. It could show us a thick red dot, which is a confirmed downwards climate, downtrend, downwards environment, but more importantly, probabilities to the downside. Or it could show us a thin dot of either color. The color still tells us the direction, blue is up, red is down, but the fact that it's thin, that's the Auto Climate app way of telling us we have less probabilities, less statistical advantage. We will more often than not choose to do nothing on those days. Here at Tradective, it is all about using technology and probabilities and statistics. We don't want to act if we don't have probabilities on our side. So if the Auto Climate is analyzing market data and telling us you don't really have very many probabilities, we're going to choose to keep away. So that's the one thing we're going to look at is climate. Another thing we want to understand is propagating. How long can we expect that climate to continue? That's what that means. So on the right-hand side, we see what usually happens in these markets. If we're in a downwards trend, how long does that market usually go down for? If we're in an upwards trend, how long does that market usually go up for? So on the right-hand side is how long that market usually goes in that direction in terms of number of candles. You'll notice these are all numbers like 3.72, 6.24, 3.36. Whatever the decimal place is, I'm going to round it up. So all of these numbers here, I'm just going to round to the next number. On the left-hand side, we see where we're at now relative to that movement. So from these two numbers, we can see, do we have probabilities for the market to continue in that direction based on what normally happens? Or have we gone past that or coming close to the end of it and therefore would be more likely to expect price to change direction? So that's propagating. What we also want to understand is nearest UFOs. So UFO stands for unfilled order. What we mean by that is where we expect there to be buy orders in the market that could push it upwards or sell orders in a market that could push it downwards. So again, we're using technology here to help us out with this. We use our Auto UFO app, and that highlights for us on a chart where these orders are likely to be and shows us visually where they are. If it's a stack of buy orders, it will show as a green UFO. If it's a stack of sell orders, it will show as a red UFO. So green UFO, buy unfilled orders, red UFO, sell unfilled orders, showing us on a chart where these big stacks of orders are likely to be that could turn price. Again, sell orders push it down, buy orders push it up. So we're going to look at that per market. What we also want to understand per market is volatility. So volatility basically means how fast can we expect these markets to move, or how far can we expect them to move within given periods of time. Same thing. So we look at current implied volatility, and you'll see here that each of these numbers are a percentage. What these numbers represent is the expected movement up or down in a year, in 1 year, as a percentage of its current value. So what can we expect in terms of movement up or down annualized in 1 year as a percentage? From that, we can then understand, if we reverse engineer it, what that looks like in terms of movement up or down in 1 day, up or down in 1 week, or up or down in 1 month. So again, we understand from this how fast we expect these prices to move or how far we expect them to move. The climate and the propagating give us an idea of in which direction we're likely to see that move. And the propagating along with the UFOs give us an idea of where price may start to turn around and change direction. So we're going to go through each of these concepts per market, and then we'll come down to look at news that we need to be aware of. So we're going to start with the S&P. So that's what we have here on the left-hand side. I'm just going to move it a little bit here so we see a bit more clearly what we need to see. There we go. Okay, so with the S&P, we see the Auto Climate app is showing us a thick red dot. So that's a confirmed downwards climate, probabilities to the downside. Now, normally, the S&P would go down for 4 candles, and we are on candle number 2, meaning we have probabilities for a continuous move to the downside, at least for a couple of days, based on what normally happens in this market. In terms of stacks of orders, we have sell orders just above us here at 3346.86 to 3375.17. Closest stack of buy orders is just here, 3271.12 to to 3204.13. So those are the orders that are in the market. So when it comes to the S&P, we have a confirmed downwards climate, probability of it continuing down, plus sell orders closer to us. So overall, probabilities there to the downside with the S&P. Now, just because something is probable does not mean it's definite. So of course, we manage our risk just in case. But for the time being, at least from what this is showing us today, probabilities to the downside for the S&P. Now, when it comes to volatility for the S&P, we expect movement up or down in 1 year of 29.93%, which means in 1 day, we would expect movement up or down of 0.63 points. In a week, movement up or down of 1.38 points. And in a month, movement up or down of 2.87 points. So that's the S&P. Let's move on to the next market, which will be oil. At CL, that's the continuous futures contract there for oil. I'm just going to squish the price a little bit here, make it a bit easier to see. There we go. So you'll see on the bottom here, on our auto climate example here, it's a thin blue dot. Might be a little bit hard to see. Reason for that is because it's thin. It's not probable. So we don't really want to be making decisions based on it. So it's a blue dot. So that's still telling us we have an upwards trend or an upwards climate. But again, thin dot tells us lack of probabilities, lack of statistical advantage. Now, normally, considering it is still an upwards climate, normally oil would go up for 7 candles, and we're on candle number 3. So we do have probabilities for a continuous move to the upside based on what normally happens, but we lack probabilities with the climate itself. In terms of orders, we have buy orders just here, 38.05 to 36.92, and sell orders just up here, 42.86 to 44.03. And you'll notice as well, we're pretty much in the middle of there, not really close to either side. So when it comes to oil for today, we're not close to stacks of orders either side. We have an unconfirmed climate. Would tend to say keep away from markets like this. We don't have probabilities one side or the other. It would be more a gamble to guess. So when it comes to volatility, we would expect a movement up or down of 39.07%. Which means in a day, movement up or down of 1 point. In a week, up or down of 2.20 points. And in a month, up or down of 4.57 points. So that's oil. Let's move to the next market, which is gold at GC. Once again, continuous futures contract for gold. Okay, so once again, we see here a thin blue dot. We've seen actually, we've gone from thick red dots to thin dots to thick blue dots to thin dots. We've had a lot of indecision here on gold, which kind of makes sense considering the price has kind of not really done much for the last few days or last few weeks, I guess. So we have a thin blue dot today, so upwards climate, but unconfirmed, less probabilities. Normally, gold would go up for 7 candles, and we're on candle number 1 of an upwards move. So we do have probabilities for it to continue to the upside when it comes to what normally happens. But again, we're lacking probabilities when it comes to the climate. In terms of orders, we have a closest stack of buy orders at 1836.7 to 1825.9. Closest stack of sell orders, 2039.7 to 2060.8. So again, gold is very similar to oil in this case, in the sense of we have an unconfirmed climate and we're not really close to either stacks of orders. We're kind of in the middle between buy and sell orders. So no real push one side or the other, no probabilities one side or the other. So we would tend to keep away. When it comes to volatility, we would expect movement up or down in 1 year of 20.22%, which means in a day up or down of 24.7 points, in a week up or down of 54.3 points, and in a month up or down of 113.1 points. So that's gold. Let's look at the last market. That's the euro versus the US dollar spot forex currency pair here. Okay, so I'm just going to squidge it down again, maybe tighten price up a bit. There we go. Okay, so we see on the euro dollar, same thing, thin blue dot, unconfirmed upwards climate. So again, it's green, it's blue, so it's an upwards climate, but unconfirmed, less probabilities. Normally, the euro would go up for 6 candles, and we're on candle number 2. So same as the previous markets, we do have probabilities for a continuous move to the upside based on what usually happens in these markets. But we lack probabilities with the fact that it's an unconfirmed climate. Now, you'll notice with the unconfirmed climates, we've put these little crosses. I don't know why one of them is bold and the others aren't, but same thing. We put these little crosses next to the ones that are unconfirmed so that you know on the newsletter, that's what we're saying to you. If it's not got a cross next to it, then it's a confirmed climate. So in terms of orders, on the euro US dollar, we obviously have loads and loads of these green buy UFOs, one on top of the other. The top one is 1.1597 to 1.1507. I've just rounded that where it needs to be for the pip. Closest stack of sell orders is up here, 1.2344 to 1.2414. Once again, just rounded that. So for the euro, again, the same as the others, we are slightly closer to buy orders and we do have more buy orders beneath us. We also do have probabilities of it continuing to the upside, but we lack probabilities with the climate. So again, we would tend to keep away from markets like this. Lots of indecision in the market today across multiple of them. In terms of volatility, we expect movement up or down in 1 year of 7.21%, which means in a day, movement up or down of 54 pips. In a week, up or down of 118 pips, and in a month, up or down of 245 pips. So again, the volatility figures here give us expectations. This comes from professional traders' opinions, expectations based on what we expect in terms of movement up or down in these given periods of time. The climate will tell us or give us an idea as to what direction or which direction we are more likely to see that happen based on statistics and probabilities. Propagating again gives us an idea of how long we can expect it to keep going in that direction. And then propagating, if we're coming to the end of it or gone past it and we have nearest UFOs close by, that tells us that we have probability of price changing direction. So again, we're using technology and probabilities and statistics here to analyze market data for us and tell us what is most probable to happen so that we can act on it. Just because something's probable doesn't mean that it's definite. So of course we manage our risk just in case, but we are always only acting when we have probabilities on our side. So that's everything in terms of these four markets, in terms of the direct forces. I'm just going to make the newsletter a bit bigger here. We're going to come down to the news. Now, direct forces, when I say direct forces, what I mean is buying and selling, buy orders and sell orders. Those are the most direct forces we have to push price up or down, buying and selling. So we do look at our UFOs and we weight those with slightly more weight than we would anything else because those are pure buy orders and sell orders. Now, of course, there can be different reasons as to why there are buy orders and sell orders, why they may be cancelled or added. So we do need to understand indirect forces, which can be a variety of things, fundamentals, commonly used indicators, technical analysis, all these kind of things. For us, we are using news and reporting for our indirect forces when it comes to the newsletter. So what we do is we look at fxstreet.com/economic-calendar and we filter by high impact news and US markets. So of course, if you want to look at things outside of that criteria, you can go to the website and change the filters there to see what you want to. So for this week, we have news coming out every day that could have high impact on US-based markets. Today being Monday, September 21st, we have a Fed speech. So we might see some volatility from there. Normally, once the news has come out, it will be populated in this actual column. If it's a figure, the figure will be populated here. If it's not a figure that can be reported and it's more like a speech or report, then you would just click on speech and you can read it to see what came out on that. Now, on the left-hand side here, we see what time of day we would expect that to come out. Sorry, something's just gone in my eye there. We would expect it to come out. So today it's going to be 10 a.m. Eastern that we will see this information come out. Again, use it how you will for your trade plan. It might be that you keep away from volatility or you change your risk parameters or whatever. It's up to you to decide what to do with it, but just be aware that we do have high impact news coming out today at 10 a.m. Okay, so little reminder for you guys that maybe haven't joined us yet and may want to, if you go to tradictive.com/you-can-trade, you can join us there. You have a free 14-day access, so you can try us out for a couple of weeks. Join us in our futures, options, stocks, investing, psychology, sharpening sessions for a couple of weeks. Look at the recordings as well. See if it suits you. If it doesn't, no problem. You just cancel the subscription. If it does, you've had a good couple of weeks to really know that this is something that suits you. In terms of classes, the next one that we have upcoming is the futures class. This is where we're going to teach you how to use this technology in the context of futures. How do we apply it to different futures markets? That starts next weekend. If you go to tradictive.com/futures live, you can learn more about it there. And of course, there is a 2-for-1 offer at the moment. So if you register for any course, you can get an additional one for free. Now, the second one you pick has to be of equal or lesser value than the first one that you pick. So go to the website, see what we do, see which ones you want to do, and obviously put it together in such a way where you get the most out of that deal. If you have questions on anything, you can email us support@tradedictive.com. Always happy to help, not just about subscriptions or courses or technology, but any trading questions that you have or any support that you need, we are happy to help. Otherwise, we will see you today. For those of you that are joining us from within Tradedictive, we'll see you in the futures and options sessions that we have today. Also, 4:15 p.m. Eastern, my colleague Boyan will be looking at what happened in the markets, what happened with this indecision, what happened with this news, what can we learn from it. That will be 4:15 p.m. Eastern. So that's the last session that will close off today. And then I'll be back tomorrow morning, same time, to go through the overview for tomorrow. Okay, I hope you guys have a great day, a great Monday. Hope the week treats you well, and I will see you tomorrow morning. Take care. Bye-bye.